Brian, the front page of the Wall Street Journal today says that NBC Universal has begun talks internally to talk about pulling The Office off of Netflix. It's the #1 most watched show on Netflix. Is that true?
Well, I'm here. I haven't read the Journal this morning, so you got me there, Becky. But the logic over time will be to take your most valuable content and find ways to deliver it where you monetize that as best as you can for your shareholders. And in the case of NBC shows, they are particularly relevant to a younger generation through other mediums and through other off-broadcast network. We see some of our broadcast shows have 2 and 3 times the ratings not on the NBC network.
Right.
So I think all the media companies are looking for ways to find the best monetization path, and we'll have more to talk about that in the future. I do think that that's what makes Comcast, NBC Universal, and now with Sky in such an enviable position. And as long as you execute well, you can continue to think about how to transform in the future. And that's why today, at least, we're focused on how well we executed in the first quarter across the board.
Brian, most people realize the value of the Sky assets. If anyone had anything negative to say about Comcast and Sky, it was how much it costs in debt the company had to take on to buy it. The Fed seems to be on hold for a while. Is the environment, are you comfortable with the debt levels that Comcast took on for Sky, or are you even more comfortable at this point because of, I mean, we've all changed our view on where rates are headed, I think.
I'm very comfortable that, and I'm really glad that we bought Sky. I think that we're able now to see relationships between the two companies. We'll have lots of things to talk about in the months ahead, but we've already gotten started in the first 100 days with a number of initiatives, global advertising, syncing up how to create a platform that no one else has. We're looking at some news with Sky and NBC News and trying to look at that globally. There's a real galvanizing effect in terms of the entire company. In terms of the question of debt levels, yeah, very comfortable. We've raised all our financings. We've paid down some debt this quarter and get to the ratios that we expected to in terms of deleveraging very quickly. And look at the free cash flow. This was an extraordinary quarter for free cash flow. EBITDA, as you mentioned, beat all the estimates. So those are the 2 metrics, of course, that bondholders like to judge us by. And I feel like we're off to an excellent beginning with the new levels. Our plan is to delever as quickly as we can over the first couple of years here and get back to where we historically have been as a solid A- credit.
Brian, how does Hulu fit into the strategy here? Obviously, it's now a valuable asset. The AT&T sale back to Disney valued it much more highly than it had been before. Comcast with a 30% stake right now.
Well, I don't have any news today for that, other than to say I agree with you. It's valuable. I would also say that we're proud to be able to have a number of our shows air on Hulu, and we have a good relationship with the company, and we'll have to see where that goes in the future. But it's, again, another asset in the company that's not in the cash flow numbers that you see this morning. It's not on balance sheet, and it is a very valuable asset. You're right about that.